There's not many companies that I'm buying right now. In fact, there's really only 3, and that's what we wanted to go over in this video, the 3 that I'm buying for October of 2020. Now this is a very short list and it's compiled down to the companies that I'm most bullish on, because you know that I showcase my portfolio balance, my portfolio performance, and my holding weightings in every single video. And this is adjusted accordingly based on what you can see from this pie chart, the 3 stocks that I'm buying right now. So let's go over what these companies are, which is Amazon, Salesforce, and Google. We're going to highlight some of the bullet points for these companies and some of the main things that I think investors should be targeting and focusing on if they own or want to own companies such as this. So if you haven't seen me before, my name is Jordan, I'm a millennial investor, and this is my portfolio balance since starting my YouTube channel back in April of 2020, with my $1,500 investment versus today's current balance as of right now, $42,000. But not only am I going to show the $42,000, I would also like to show my performance since joining this brokerage, which is listed right here. And if you want to see these holdings, if you want to see my growth portfolio showing right here, and if you want to see my dividend growth portfolio, I showcase these in all of my videos, and they're listed down below in the description, as you can see right here. And one of the things listed down below in the description includes the referral bonus to M1 Finance, which is $10 for getting signed up. 126 people have done that so far, so be the 127th person to do so. You'd help support me, you'd help support the channel, and without further ado, let's go ahead and dive into Amazon. Now, I could talk about Amazon's most recent quarter results. I could talk about the free cash flow. I could talk about the operating income, their net sales, all that good stuff. But what I want to start with is the highlights. And rather than read all of these one by one, it goes on for a million bajillion years. It's pages long. Now, I could sit and talk about every single one of these, but instead I'd rather slowly read over some of the main bullet points and just to give you an idea. Now, as I start scrolling through these, remember that this is quarterly. This is not within the last year. This is just within the last 90 days. This shows you how fast Amazon is innovating. So I got the slowly automatic scroll going on here. It talks about shopping innovation, with Prime Day selling over 100,000 items per minute. We have Grubhub Plus being added to the Amazon Prime membership. Thursday Night Football being bought out by Amazon. You have its first party sales expanding. You have, for the first time ever, Prime Air drone deliveries being delivered in the United States, with California and Texas being some of the first states to experience that. 12 new Amazon Fresh stores being added, which is adding dozens of those every single quarter and every single year, adding about 100 stores maybe every single year now. These are all types of things that Amazon Prime is working on, and it just keeps on going. You notice that I scroll through here, it talks about all different categories, and it even is about to get to its devices and services and AWS segment, which I find most interesting. And it talks about, let me scroll forward, let me go to AWS because I always talk about that being the most important part of the business in my opinion. It talks about huge wins with Delta Airlines and Riot Games, and as well as lots of other foreign telecommunications companies like BT. Now, I could sit here all day and talk about all the stuff that this company is doing, but you get the point. You see all the amazing stuff that this company is doing to innovate, and it shows in its numbers. If you go to its revenue right here, and you see this beautiful revenue chart continually going up over time, you can see that due to all these types of innovation that Amazon is making, it leads to a higher revenue growth. And along with that higher revenue growth, you see long-term growth of net income on an annual basis. Going back just a few years, just 6 years ago in 2015 versus its most recent 2021 reporting, in 2015 it was almost zero. It was $600 million. Last year, $33 billion. That's a big ramp up, and it doesn't look like it's slowing down anytime soon. Now you can see this from my portfolio. You can see what I have projected here for Amazon, and you can see even in the most recent quarters, it's grown 7 and 7% in the first and second quarter of 2022. Now it's projected to have higher growth in quarter 3 and quarter 4, and we're going to finish around somewhere around 10 to 11% growth for the year. Now keep in mind this is during a recession. The company is growing at 10-11%, and it's planning on very, very soon reaching $500 billion, $500 billion in revenue in 2022. So hopping over to the research tab here and typing in ticker symbol AMZN, you can see that this is a company that has finally hit some headwinds. Going over the last year, it's down 24%. Year to date, it is currently down 27%. Now this is Amazon we're talking about. From its all-time high, it's actually down around 35 to 40%. So this is the time, in my opinion, to be buying Amazon. It's not financial advice. Do your own research. But when I look look at a company like this that is down this much and has this much room for growth and is still growing around double digits in a recession, I think it is the opportunity to be buying shares now at around $120 or so, rather than where it was at a year or so ago at around $180. So that is the opportunity there with Amazon. Now, next up, I want to search here in the research tab. I want to type in ticker symbol CRM. You can see that CRM, which is Salesforce, in the last year is down 42% and is down 38% year to date. From its all-time highs, it is still down over 50%, cut half in price and share price. And if you think this chart with Amazon revenue looks beautiful, wait till you see ticker symbol CRM, Salesforce's. Their revenue chart quarter after quarter, if I just showed you this chart and I didn't tell you anything else, would you even think that we're in a recession? This is what this company's revenue chart looks like throughout recessions, okay? Look at the 2020 and 2022 ramp-ups. Despite going through 2 recessions, it just continually goes up in a straight line with almost no hiccups. And if you look on an annual basis, if you look at the free cash flow, which is the profitability that this company produces, it just goes basically vertical. It goes up and to the right, especially as we get further down the line, as it becomes more profitable and more efficient over time. That net income, that free cash flow gets higher and higher and higher by the year. And that is because this business is one of the best high moat businesses in the world, in my opinion. And why do I think that? What is the reason that this company's moat is so wide? Well, because this company's total addressable market is massive and it is growing. According to their projections, their market is projected to grow at about 13% a year. So even if they don't take any market share, the total addressable market, the TAM, is expected to grow 13%. And not only is it expected to grow 13%, but their existing customers are acquiring more of their products. They're a diversified set of businesses, and I think of this company much like mini Microsoft, where it's not one company, it's more of like a collection of companies under one name, CRM. Now, almost all of their revenue comes from 20% of its customers that have 4 to 7 different clouds under its umbrella of products, which is where almost all their money's coming from. Now, this is what gives them a dominant moat. The people who own multiple products, who are continually paying month after month for all of their suite of software, is really where the money's made. How do I know this? Well, their multi-cloud adoption backs this up. You can see that in 2021, it was 93%, and then increased to 95%, and then in fiscal year 2023, now it's up to 96% of multi-cloud adoption. The real money is not from their sales platform selling to all the customers. It's really from the people that have 4, 5, 6, 7 clouds, was really where the bulk of the revenue comes from, and more importantly, the bulk of the profits. Now, as I said, the category is growing, and this company is forecasting major growth of a $50 billion fiscal year 2026 revenue target. And I think that they're going to hit that, and I show this type of confidence not only in myself, but from the management team, because they just announced the first ever share buyback program of about $10 billion. Now, for reference, if you pull out your calculators here and you look at what this company's current market cap is at about $155 billion, you take 10 divided by 155, that means that over the next year or so, when they're implementing this buyback program, they're going to buy back about 6.5% of the owned company back in stock. So this is one that I'm bullish on. You can see that over time, you see that the revenue continually hits record after record after record number, quarter after quarter after quarter, while the stock price is going down. Furthermore, the real thing that should matter to you as an investor is not this revenue chart. Don't get me wrong, revenue growth is nice, but what we really care about is free cash flow. So free cash flow is continued rising, and even when you factor in dilution, which is the shares outstanding going up as they award stockholders and big company executives and developers and all types of stuff like that, when you switch the free cash flow to free cash flow per share, which factors in dilution, you can still see that this is going up over time despite them issuing shares. Even when you factor in shares being diluted, this is still going up. And now considering that we're buying back stock, this is about to get a lot better. Now, the last company that I'm buying, the second company on the list, and I didn't pull out any material. I mostly just wanted to talk about this company because I wanted to show you what I have made for Google. You can see that this company has been growing for a long time. Top line revenue, bottom line free cash flow profits. You can see all this good stuff. And of course, like many of these companies, it has gone down a massive amount in share price. You can see that year to date, Google is down 29%, and in the last year, it's down 23%. You get the picture. The company's all time high was, I think, 155, and today it's at 102. I picked up my shares just a couple dollars below just last week at $97 a share. I think last Monday, if I remember correctly. I can't remember. But anyways, if we hop over here and we look at Qualtrim and we look at the quarter over quarter basis, in the most recent quarter, they grew 12.61%. In the times of a recession, when everyone's terrified, you can see that their revenue is still growing well into the double digits. Now, free cash flow has gone down some, and you can still see that it is still pretty high compared to where we were pre-pandemic. It has come down, however, but the main thing that I want to focus on here is two things. The first one is the shares outstanding. The company just pulled its lever at around 2019 when it decided to start buying back shares. Their share buyback program that they just announced is $70 billion. We talked about Salesforce's share buyback program of $10 billion. We'll multiply that times 7. That is Google's share buyback program that they just came out with. And their current market cap is around 1.33 trillion. So let's do some math again here, folks. If you do 70 billion divided by 1.33 trillion, they're buying back about 5% of the company, which is amazing considering how big Google stock is. Now, what I want to look at here is I want to hop over to Google's tab and I want to look at the projections that I made for Google, and I made extremely conservative projections. Now, where I have the share price right here, where I need the stock price needed for the year, that's based off of my $1 million goal, how I plan to get to $1 million by my 40th birthday, which you can see right here. But the thing is that I have bear, mid, and bull cases. Now, if you don't know me, I try to make these conservative. They're intentionally lowballing what I actually think they will do, because if I look at these numbers and I make them conservative, and this company, in my opinion, is still an attractive investment, then that's where I want to be. Let's just look at this. If this company were to grow 5% a year, with a 23% cash flow margin. Now keep in mind the free cash flow margin last year was 26%. So it still would go down over the next 5 years in 2026. You can see that this company put a price of free cash flow with 10% price growth, $140 in 2026. This would still only put it at a price of free cash flow at 21. Now the question begs, will this company hit 23 cash flow margin, and will they hit 5% revenue growth? Well, like I said, last year they hit 26%, so this even factors in lower margins than where we were at just a year ago for years on out, almost half of a decade's worth. It assumes that these profit margins and these operating margins basically never come back. They stay flat or even go down for 5 years straight. It also assumes that this growth rate continues to go lower. Right now we're growing 21 and 34% on a 1 and 2 year basis. It assumes that that growth rate only goes down to 5%. 5. It overcuts down in half. And even in that scenario, this valuation appears pretty attractive. Furthermore, I think Google has a pretty decent moat. People will continue to use search. YouTube is still growing. The Google Cloud is still growing in a big, big way. And so Google is one that I want to own. It's not as bullish. I'm not as bullish on Google as I am versus my other investments, say a Salesforce or an Amazon, but it's one that I'm definitely bullish on. And to be honest, if I had more money to purchase more stocks right now, I probably would be buying more Google. So you can see this reflected in order, my largest position being Salesforce, my second largest being Amazon, and then my third being Google. These are the 3 that I'm focusing on buying in October of 2022, and hopefully this gave you some insight for why I'm buying these companies and why I think they're attractive. So if you found value in this video, subscribe, check out all the stuff down below in the description if you haven't already, and without further ado, my name is Jordan, I'm a millennial investor, and I'll catch you guys next time.